we are starting to build kind of a rising trend of bottom. So if the market's able to rally today, hold that rally, we're continuing to build higher bottoms on this rally. So we're starting to build this kind of this wedge, this consolidation of prices between the previous highs and where we are. Here's what you need to know before the bell. Markets were trading lower yesterday. We're down about 30 basis points, and that was a little bit lower than where we were the day before. So, remember on Tuesday, we sold off after hitting the 20-day moving average last Friday. So we had run up, hit this 20-day moving average. We're fluttering around with the 50, and then we failed that first test, sold off on Tuesday. Then Wednesday, we kind of followed through that. But during the intraday, on yesterday, we had a massive flip in this market. We were down about 30 basis points on the market most of the day heading into the Fed meeting. Once the Fed came out, they made their announcement, stocks rocketed higher, and we actually went back and retested the 20-day moving average and then held there for just about 20, 30 minutes. But as we got into the last kind of section of the day, that last hour of trading, and again, most of the trading for institutions occurs in the last hour, mostly in the last 10 minutes, we had a very sharp sell-off, completely reversed all of that gain and wound up back at the lows. So again, we still saw kind of the most of the Magnificent Seven holding in there yesterday. Amazon, of course, after their report did well, but again, the market's still kind of struggling in this range. So this morning, the markets are going to open higher. We'll see if the markets can rally back up here. Now, a couple of things technically that are going on is that we are starting to build kind of a rising trend of bottom. So as you're looking at this correctional process that we're going through, if the market's able to rally today, hold that rally, we're continuing to build higher bottoms on this rally. So we're starting to build this kind of this wedge, this consolidation of prices between the previous highs and where we are. So that consolidation is going to setting up this kind of a spring, so to speak, in terms of prices. So wherever eventually this market breaks out, if it breaks out of this consolidation to the upside, we'll have a fairly strong move higher. If we break out to the downside, we'll retest this 200-day moving average down around 4,700. So again, this is a significant process that's going on here price-wise. So again, worth paying attention to. Again, don't be overly anxious here. There's the bullish side of this is that we are building higher bottoms on this trend so far. So again, that's starting to kind of suggest that maybe we're getting through this current correction. May tends to be a little bit of a weak month, so we may get some more sloppiness kind of going on in the markets for the next month. June, July, August tend to be a lot stronger in presidential election years. So again, as we kind of get, and maybe we kind of pulled the correction from May that normally occurs back into April, we'll see. But again, we're starting to kind of work through this consolidation correction process. And as long as we can continue to hold this kind of support at the 100-day moving average, continue to build those higher bottoms, that kind of suggests this market still got some momentum behind it. So we'll pay attention to this. We'll keep you up to date on it, of course. That's what you need to know before the bell this morning.